Okay, so what's our next question? Let's see. It's about Roth 401k, about a rollover. So after rolling over a Roth 401k into a Roth IRA, are taxes due on earnings portion of the rollover? And does this affect the decisions to continue contributing to Roth 401k? Okay, so first of all, I don't know if you have already done this or you're planning on doing this, is 401k are managed by your employer. So first question I would have is, does your employer allows you to transfer funds from your Roth 401k into a Roth IRA? Usually you transfer from 401k to IRAs once you have left that employer. So that'd be the first thing I want to make sure that that is possible. And then if it is possible, then you obviously want to make sure that you're doing a trustee to trustee transfer. Because if you don't do trustee to trustee transfer, then that can possibly seen as unqualified withdrawal, which can cost you penalties and interest. Now I don't know what your age is, but normally if you are more than 59 and a half, then you can withdraw it without any penalties. But before 59 and a half, you can run into some trouble with your 401k rollovers. Now, as far as earnings is concerned, I mean, if it's a Roth account, that means you paid everything after taxes. So because you paid everything after taxes, you did not take any deduction on it. So during your withdrawal, there will be no tax consequences either. You will be able to withdraw without having to, you know, taking any kind of required minimum distribution or paying any taxes on the earnings that you may have earned. So that's one of the cool benefits of Roth IRAs. Another thing you want to think about is also is, do you really want to use this Roth IRA for yourself, or perhaps would you like somebody to inherit? So again, depending upon what your personal situation is, because when people inherit Roth, now they have almost 10 years to transfer that Roth into the beneficiary's account. So there's a strategy there to be played. So, I mean, I like Roth 401k accounts, and I love IRAs as well. The main difference is, like I said earlier, that your 401ks are governed by your employer versus your IRAs gives you a little bit more flexibility. I can use my IRA funds to buy a real estate. I can use them to buy crypto. I can invest in businesses. It's just, IRAs give me so much more possibility. So I like the idea overall, but having that said, I would still recommend that set up a consultation and let's take a look at an overall retirement situation. What's going on with your, you know, other sources of income, or what, are you already at retirement age? When are you getting in retirement age? What kind of social security would you be getting? Any kind of pensions or any proceeds coming from insurance or any other fixed income that you have? How much do you have in pre tax dollars invested in your retirement plans versus post? So there a lot of information is missing from providing a comprehensive answer. But that's my thought. Overall, I like this strategy. Just be careful with a couple of things that I have mentioned out. Just as a reminder, check with your employer. First of all, do they even offer that or not? Make sure it's trustee to trustee transfer. Um, those are the two main ones. But I overall love the strategy.